Alrighty, folks, we are going to start this daily financial news with perhaps one of the most unfortunate results of the tragedies that occur, or tragedy has occurred in Southern California, the wildfires. And I just want to get it on record because I think we are going to start to see this come into the public domain in the next 3 to 9 months. And that is very much like what occurred in Hawaii. You are likely already seeing vultures, just the worst of the worst, come in. And what they are going to do is they are going to do what is called land banking. There are likely phone calls, emails, text messages from these folks looking to take advantage of just a horrific situation. They are going to come in and they are going to offer desperate people who may need, who their entire net worth was locked up in this asset that they bought in the 80s or 70s or whenever. They are going to offer them what seemingly feels like a lot of money. And these vultures have zero moral aptitude. They are not doing it to be good people or yada, yada, yada. You know the drill. What are they doing? What they are going to do in a very quick order is they are going to try to land bank as many lots as they possibly can. And then over the next course of the next 2 to 3 to 4 years, they will likely trade these lots with other land bankers, trying to create, frankly, monopolies where they control a disproportionate part of an area. And then they will look to sell that land bank to developers. On top of that, I heard Gavin Newsom, which by now you know I have no respect for. I have known of him since my days at Santa Clara. We went to the same college. So I know of him long before he was this political monster that he is today. And all I can tell you is he was the same rotten individual in college that he is today. He has not changed his stripes. He's just got better at hiding it. He is out talking today about LA 2.0. All I can see when he speaks is the Joker. I don't know if you guys seen this meme. I think it's called a meme on Twitter or X, comparing him with the Joker smiling wide. And yeah, he's got to go. But anyways, that is my personal axe to grind. I don't want to go down that anymore. But again, what we are going to see for the next 9 months is, funds, land bank, prime lots in Southern California. So you can write that down. We're going to hear about that in the next 6 to 9 months. Let's talk about what's going on. Obviously, I don't know if you saw Dan Bird's review of the market yesterday, or the second video about the Mag 7. Pretty much his calls were correct. Very ugly open. A lot of the great rotation seems to be occurring. A lot of the Mag 7 certainly seem to be taking it on the chin this morning. It will be interesting to watch where that goes. I did see Bitcoin this morning got under 90K, which I think is down like 13 grand from the peak. So this might just be risk off, right? Why would risk be coming off? Well, I think there's a general impression that rates are going to be higher. I think risk was on when people saw the Fed coming to the rescue, cutting 2, 3, 4, 5, 6 times, basically, allowing the easy money printer to go burr and assets to scream higher. I believe it was Bank of America over the weekend came out with a dose of cold water and basically said, guys, we're getting 0 cuts in 2025. And oh, by the way, if PCE goes the wrong direction, we should be talking about rate increases, not rate cuts. In fact, as of this morning, Wall Street has repriced rate cuts for 2025. Smart money has taken rate cuts down to 1 in 2025. And folks, I don't know if you remember this. It was 6 like, what was that, like 6 months ago, 7 months ago? And again, something that I will be very proud of, frankly, is I called months ago, long before it was popular, the fact that 2025 would bring us zero cuts. Certainly zero cuts through June, through the first half. There are some variables that could make Q3 and Q4 different. But thankfully, if you're watching this channel, you were ready for those rate cuts to vanish. Saw an article saw a talk with Dan Niles. Dan Niles is a stock analyst, and for the first time since 2022, that should be an important year for you. If you were in the stock market, you probably remember 2022, and if you were not nimble, you likely got your head cut off. Dan Niles names cash as a top pick for 2022. He says you should be keeping dry powder and use it strategically. This actually brings to mind a conversation I had with a good friend in Vegas. A good friend in Vegas has been socking away cash for a while. He runs a real estate office brokerage, and he called me up over the weekend and said, Michael, I'm thinking about buying a commercial building. He ran through the numbers, this, that, the other thing. And, on a cash flow or a monthly expense level, because he's renting where he is now and he could buy a different place. And, if you did the math, he comes out ahead slightly. However, in this transaction, he would be tying up $500,000. And it's funny. I had not seen Dan Niles talk yet. I told him that, dude, this is a buyer's market. We're in a buyer's market. Don't you dare take a significant portion of your dry powder and lock it up in an asset that you're paying retail for. Folks, in a buyer's market, cash is king. Access to cash is king. We are only going to deploy dry powder, cash, when we find or we create great deals. Said another way, don't you dare pay retail. So it's funny. I had that conversation on Saturday, I believe. And here we go Monday morning. Dan Niles is agreeing with me, which makes me feel pretty good. Wanted to highlight something for you. Again, folks, you all know I'm spending a bunch of money. I got my badges in for our event in February, general admission, VIP. And just so you know, I took the time to write a nice personal message on the back. Hopefully, when you get these badges, you read them and you feel what I was trying to deliver from the heart. So hopefully you get those, you like those. We'll also have name badges for those that want to wear them. We'll have these, I'm going to go buy them, the little stickies. If you want to put your name on them, that's great. Not everybody wants to wear a name tag. I understand. But we will certainly have that available for folks. We've got some updates on retail and the holiday seasons. Abercrombie & Fitch, Lululemon, and others have all raised their holiday shopping quarter. Apparently, consumer spending was stronger than expected. Folks, obviously, we talked about it yesterday, but it bears repeating that the CPI number coming out on Wednesday is expected to be ugly. I mean, I don't know how else to say it. If you remember last month, CPI headline went up from 2.6 to 2.7. One data point does not make a trend. However, it is now forecasted to go from 2.7 to 2.9. Now we have a trend, and one could actually say an accelerating trend. So it is going to be very interesting to see how Fed presidents talk about that. The question I have, the question I've been thinking about since Sunday when I read that and I had to validate it because I thought it was fake news, is a rise to 2.9 proof or evidence that the Fed was wrong again? Did the Fed make another mistake? And the only answer I can come up with is, hell yeah. I believe that December rate cut, and have said it many times, was an absolute mistake. It should have been kept in the back pocket. You should have waited for the new president to come in. You should have waited to see what his policies were. You should have, and you didn't, and you were wrong. You made a mistake. And, that is what it is. When you look at 2024, the biggest job creators, probably not to be surprised, but I thought I would read them to you just because, again, we can put them and we can understand what's going on. Healthcare, government, leisure, and shockingly, construction. I was surprised to see construction as the number 4 largest creator of jobs. We do have some important earnings coming out later this week, starting on Wednesday. We will get JP Morgan, Goldman, Wells Fargo, and Citigroup, followed by Bank of America and Morgan Stanley on Thursday. Again, we should probably not expect anything at these too big to fail banks. I will be looking for a couple of things. Loan loss reserves. Are they rising? Are they using them? I will be looking for loan origination. I will be looking for their interest carry, right? What are they making on just carrying, you're basically holding your savings. These are the things that I will be looking at going forward. A couple of things I do want to talk about this event that is coming up in February. It's only 33 days away. We have 9 VIP tickets left and only 58 general admissions, so a total of 67. We will be selling out, folks. They're going fast, about 4 or 5 a day. I suspect if this is like last year, they are really going to start to accelerate. So if you have any intention of coming, go get your tickets today. Just go to Eventbrite. You can look up One Rental at a Time. It should be very easy to see. And don't worry, the virtual event is out there. I do want to thank you. A lot of you said, hey, Mike, I'm going to get that ticket, but I'm just going to buy it later. We've got 13 people signed up for the virtual ticket. So again, just keeping you updated on what is going on with the event. And I will stop talking about the event once it is sold out. That is a promise for me. So again, go get the tickets. Let's sell it out so that I can just keep focused on putting on an amazing event. Next thing I want to talk about is the Fed. We have a lot of Fed speeches going on this week. I just wanted you to see a list of Fed comments that I've reviewed for the last 24 hours. We're going to hear from folks like Fed President Goolsbee, Schmidt, and Barkin, plus Bowman. So let's go through just a laundry list of what they've said. We'll start with Goolsbee. 12 to 18 months from now, rates will be a fair bit lower if, there's always that word, if current expectations are met. So that tells me that if you're wrong, which you've been wrong a lot, rates won't be lower. Again, this is Fed President Goolsbee. Rates are going to go down if, again, that little 2-letter word, if no uptick in inflation with full employment. Next, Friday's jobs report, not a sign of overheating. Next, job market will not be a source of inflation. Finally, the rise in long-term rates is not explained by expected inflation. If you remember, I think it was 3 or 4 days ago, we talked about the long-run 3-year and 5-year expected inflation taking noticeable jumps higher. I tried to figure out what Goolsbee was saying here. I don't know what he's saying. Maybe he's talking about the federal deficit. Maybe he's talking about, I don't know what he's talking about. If we're not seeing a rise in the long-term rate because of inflation expectations, my next follow-up question would have been, all right, buddy, where's it coming from? And I did a lot of searching, and I could not find the answer to that. So if you happen to have seen Goolsbee explain what comes next or why, I'd love to see it. Send it over. And then the last thing Goolsbee said is inflation over the last 6 months is annualized at 1.9%, meaning we are at or below 2%. He blames the uptick in inflation on the sticky part of Q1 of 2024. Well, based on what's coming, buddy, we might have that same situation again. Have you seen oil prices? Oil prices are racing. I think they were $81 a barrel today. All right. So that's it for Goolsbee. What about Fed Schmidt? We won't get to 2% inflation until 2026. Hello, higher for longer. Fed President Barkin. This was a good one. This will probably set off a bunch of doomers. But again, he said it, not me. I'm just repeating it. Consumer debt burden is still well below 2018 and 19. Now, before you fly off the handle and go, that's not true. Have you seen the credit card debt? A couple of things. Let's go back and revisit what he said before you get all wild and crazy. He talked about consumer debt burden. He didn't talk about credit card debt. He talked about debt burden. So what does that really mean? What that really means is what is the collection of debt and what is that debt financed at? I don't have any recent numbers, but from memory, I believe about 80, let's call it 85%. I think it was 89, but let's go to 85 just to be safe. 85% of consumer debts are fixed, leaving 15% variable. Most of that 85% debt is fixed at stupid low interest rates. So yes, the total debt burden in dollar amounts is likely higher, and undoubtedly so, but the debt burden, given the large percentage of the debt that is fixed, is actually lower than 2018 and 19. That is what Fed President Barkin is saying, and it's not unreasonable to think about. Let's get Fed President Bowman. I love Michelle Bowman. She was the first president to dissent. She said the 50 basis point cut was a mistake. I read everything that she is quoted in because I think more and more Fed presidents, she was out all by herself for a minute, and I think a lot of the Fed presidents are moving in her direction, which is awesome to see. She said, I love Michelle's awesome. I mean, if I could ever interview Michelle Bowman, that would be fun. That would be fun. Let's see if we can make that happen. Let's tag Michelle Bowman on Twitter or X and see if we can't get her interviewed on this channel. She said, and I quote, "The December rate cut should be the last." I agree. I also agree that the December rate cut is a mistake, but why quibble? Why quibble? If the December rate cut is the last, fine by me. One last thing before we kind of wrap up today. Fed Schmidt, interest rate policy may be near where it needs to be long term. Again, the Fed is often trying to get to this R star, this neutral rate, where it doesn't help or hurt the economy. I think, again, more and more people are being drawn to what Michelle Bowman said 6 months ago, I think, certainly 5 months ago, that the R star or neutral rate likely has a 4 handle, not a 3 handle. And again, I think Michelle Bowman is likely going to be proved correctly. So folks, again, hope you enjoyed this daily financial news. Please help me sell out our Vegas event so I can stop talking about it. I'm sure you are done hearing about it. Again, we have a total of 67 tickets available, 9 VIP. I expect those to sell out very quickly. And please sign up for the virtual event. And again, remember, you will get a full replay if you sign up for either in person or the virtual event. It is just what I like to do. I like to exceed expectations, and I hope you enjoy these and the messages I put on the back. So folks, take care of yourself. Have a wonderful day. Later.